This conference will now be recorded.
Thank you so much. Very nice of you. Feels nice wishing Happy Teachers Day. Once in a year, we remember all our teachers. So I'm sure everybody has teachers in their life. So it's very nice. Thank you. Okay, please don't bombard with all the messages. I'll take all of you have wished me. That's fine. Thank you so much. Which one you want me to do first? Cash flow or balance sheet? Some of you have done, some of you have done slight small mistake here and there. But I think if I solve it today, or I think all your doubts will be clarified. Just give me 1 minute time. I'm just setting up the system. Oh my God, all of you are saying balance sheet. First, let me go for the cash flow. Then I can combine everything and we'll be able to tell. Were you able to do this cash flow one? What was the answer? I'll do the balance sheet, don't worry. First, let's finish off cash flow. We have enough time. Okay, now we'll see this. So what should be the CFO? Okay, let's see. You are getting 21,000. Some of them are getting 10,200. Okay. Let us see. Cash received from customer is CFO. Cash paid from expenses, suppliers is also CFO. So I think everything is in line, but I think I can copy that one by one. I can copy. Okay, and 1,46,000, 81,000, and 47,500. You add up everything, you get 2,74,500. Is it correct? But remember, we are doing cash flow. When you're doing cash flow, when cash going out is negative, and when it is coming in, it is positive. So keep that in the mind. So cash received, obviously it is positive, but I have paid for it. So then what happens? So it become minus. Then cash paid to the supplier, also cash going out, so it is negative. Next line of item, cash paid to acquire additional equipment. See, equipment is an asset. So that means I have paid to acquire additional equipment. What was the amount I paid? That means it went out of my pocket. So obviously it is going to be negative. So that means minus 20,000. Then cash received from investment of owner. Where will this go? Anyone? Excellent. Very good. It's investment. Anything with respect to investment will come under CFF. And that is nothing but you have received, so it will be plus 10,000. Whereas CFI is only one item. Sum of 20,000. Close it. Enter. And then you have cash received from bank loan, cash paid for the bank loan. They're all nothing but CFF. Cash paid for bank loan because they're all something to do with equity, loan, cash paid to owner, withdrawal is also CFF. Please do not memorize it. Try to understand. If you have any doubt, you can ask me. Now, cash received from bank loan is 50,000. You have received it, so it is plus. Cash paid for bank loan. So that means you have paid to clear off some loan. So it will be minus 26. Then cash paid to the owner. So you're paid to the owner. So it has gone out of your pocket. So it will be minus 26. You add it up, you get 13,000. So what is your net change in cash flow? Obviously it is CFO plus CFI plus CF. 10,000. And they are saying before starting on the 1st of January 2019, you had 10,800. So what is your cash balance by end of December 31st? So paste it here. So it will be, remember, beginning of the period plus net change in the cash flow. That is nothing but 21,000. So your EOP is equal to BOP plus net change in cash flow. Any doubts in this? I think this is fairly simple one. I hope you had. How many of you, please honestly tell me, just type one if you were able to do this completely by yourself. Be honest. At least 90% if your answer is correct. See only 15 people out of 42. So others wouldn't even have tried. At least if your answer is 90%, you can just put one. It'll be nice. All right. Next, go to the cash flow 2. I want your help. I had gone wrong in the sign, sir. Okay, no problem. Just clarify. I need your help. I don't want to solve each and everything all by myself. I want you. What should I do now? The CFO. Please respond, all of you. Net income first. Okay. Copy this. Paste it over here. All right. So last year 0. This year the income has increased by 1,50,000. Okay, next what should I do? Dividends paid, where it should go? CFF. Copy this and tell me amount, how should I record it? Correct. Last year I have paid to the shareholders 50,000. This year I have paid how much? 75,000. It shows in the balance sheet. So dividends paid is actually a balance sheet item. Last year was 50. This year my amount has gone to 75. So that means I have paid extra 25,000 from my pocket. So that means it's gone out of the pocket, right? So it'll be minus 25. Hope all of you understood this. Next is the depreciation. Depreciation, I told you it is a CFO and it is of 1 lakh. This year also 1 lakh. Net debt. Where will this go, net debt? How much should I put? Very good, 15,000. Equity, it's the same thing, but it will be only 1,000. Next you have fixed asset gross, which will be under your CFI. Last year you was 10,000. This year how much? 12,000. So how much money extra it has gone out of your pocket? Minus 2,000. Then account receivable. Where will account receivable go? Can you please tell me? Very good, CFO. And what should be the answer? Plus or minus? Correct. If anybody is not clear how I got 5,000, please ask me. I'll help you out. Next is account payable, which will come under CFO. And then what should be the value for account payable? Very good. Minus 20,000.
Sir, in this, it is given fixed asset in gross. What if it's given in net income? Then we have to subtract depreciation and then we have to write it.
You have to add up. Net plus
Okay.
depreciation will be your gross. Right. Net is equal to gross plus depreciation. So according to you, if they give net, sorry, gross minus depreciation is your net. So if you, according to your question, if they give you net plus depreciation, which will give you gross. And in cash flow statement, it is always gross fixed. Balance sheet, it is always net. So formula is net is equal to
Okay,
gross
sir.
minus depreciation. Why account receivable is 5,000? Okay. I was hoping someone will ask that question. See, last year you are supposed to receive from others 50,000. This year you are supposed to receive only 45,000. Why did 50,000 became 45,000? Why did you? So someone would have given me 5,000. That is why my entire account receivable has reduced to 5,000. So someone has given me. So cash came to me. So it is 5,000. Next year, if my account receivable is say 35,000, now it's not a magic. 50 it was, then it became 45. Now in this year it became 35,000. How did it become? How did it reduce? Because someone would have paid me 10,000. So that year I will use plus 10,000. Hope I was able to convince you. Same thing as account payable. Last year you had 50,000 you were supposed to pay, but this year you're only supposed to pay 30,000. Super. But how come it changed from 50 to 30? Means somewhere in the middle of the year you would have repaid 20k. That is what I am recording as minus 20. But remember, last year was 50,000. This year, in case, what if it had become 90,000? I was supposed to pay 50 last year. This year, I'm supposed to pay 90. It's increased. So that means I have not paid. So that particular year, I have to put 40,000 plus 40,000, 50 plus 40. So sometime account receivable can be negative or account payable can be negative or positive depending upon the logic behind it. So don't assume all account payable are negative or all account receivable are negative. Depends from last year to this year whether it has increased or decreased. So you should keep that in the mind. Rent paid, where it should go. No. Actually, why rent paid is coming? This is not eligible, not applicable. It's not applicable. So by mistake, this has come. See, it's an income statement line of item expense. It's an expense which should not come in the rent paid. You have unknown revenue. Last year, I missed inventory. Yes, inventory is an asset. Where should I put? Under CFI or CFO? Correct. So inventory. How much? Minus 25. Rent paid is not applicable. Unknown revenue last year, this year is 45,000. So it will be unknown revenue. You have received the money, so it'll be plus 45. Advance rent is an asset. Plus 25. Now you have paid, right? Minus 25. Please tell me any doubt or check if I have gone wrong anywhere. It's not that I will always be right. Sometimes I can also make mistakes. So don't assume whatever I do is correct. You can please question me, correct me, stop me if I am doing something not right. 2,19,000. End of cash period is
So why is unearned revenue in CFO?
actually you can put in CFO, you can put in CFI also. Why did I put in CFI? I'll tell you. Okay, one by one. Why did I put in CFI is because see, advance rent is a one-time expense. You're not doing it every day, or you're not doing every month. You're not paying advance, like deposit. Like if you rent like a apartment, maybe 9 months is your advance rent or a deposit. So it could be just one-time expense. So that's why I put it under CFI. It's debatable. Some companies take it under CFO, some will take on CFI. Absolutely fine. But since it's a one-time investment, my school of thought is it should be under CFI. And inventory is an asset, I understand. But don't you think inventory you keep buying and selling almost every day? Don't you think it is a day-to-day operation? Buying books, selling books, buying more stock, reducing stock. So don't think CFI means that not necessarily every asset should be there. CFI is more of one-time investment, a one-time purchase, one-time sale. So that could come under CFI. Anyone missed out any questions? Or I missed out anybody's? Please.
Yes, sir. Why is unearned revenue in CFO?
Yes. See again, why we keep it under CFO is that unknown revenue is a repetitive. Like we saw subscription, right? For 1 year, every month it detects, it repeats. Next month again, your unknown revenue will reduce because you have given the service. Probably next month again it will reduce because you have given the service. So it is repetitive in nature. And that's why we have kept unknown revenue under CFO, which can be a day-to-day.
Yes, sir.
Okay. Whereas CFI, you're only buying asset only one time. Advance rent, you're only going to pay one time. CFF, dividends, net debt, equity, they're all with respect to money getting in or money for your business or paying to your shareholders, CFF. But observe CFO, income will come every day to you, every month, every week. Depreciation is only one time, but then in standard procedure, they put it in CFO because it's straight line method, it keeps depreciating every day. Account receivable, your suppliers, customers, account payable also your suppliers, receivables, inventory every day going, coming, unknown revenue, the minute you give your service, unknown reduces. You don't give service, your unknown revenue will increase. So it's a repetitive in nature. So total cash available in the company will be net change in the cash plus end of period cash is 40,000. It's 2,59,000. Any doubts?
Sir, it is end period of cash, so we should minus it, subtract it.
No. End of period cash. Not subtracted. That's a mistake, I think. That is not a. That's correct only. See what happened. Company. Okay, it should have been actually beginning of period. That's a mistake, I think. So company had 40,000 cash already with them. Along with that, they made a business of 2,19,000. So now, how much cash they have? 2,59,000. Please make changes. It's going to be beginning of the period. Because it doesn't make sense to write end of the period because the end of the period is itself is 2,19,000. You can't have two of it. So by end of December 31st, you have got extra cash of 2,19,000. Plus in January you had 40,000. So it's 2,59,000. Can I go ahead for the next one? The balance sheet. Lot of students have actually submitted your assignment just 10 minutes or 15 minutes before the class starts, and please don't do that next time. I won't have time to just review your sheets. Okay, so please don't do that. And even if you're doing it for the last minute for sake of doing it, you will not be able to succeed. Okay, so that's it. I think we finished balance sheet 4. We finished 5th. Did we solve the cash flow statement of the balance sheet 5 of indirect method? Okay, we have done it. How come I'm not saved it? Sixth one also we did, right? Did we do the sixth one? Oh no, I'm not saved it. Can anyone share in the WhatsApp the sixth one? I have not saved it. Anybody wants me to solve the sixth one? From beginning I will do it. Otherwise I'll just start with the cash flow. Okay. I'll solve the cash flow, don't worry. So this is one of your friends who have done it. Just a minute. This is fine. So first is the profit is 333, depreciation is 417, change in the rent. Now again, this will not come into picture, right? Change in the rent. It's an expense which is not related to your CFO. Change in account receivable. Last year you did not have anything, or last month or whatever it is. This month you're supposed to receive 2,500. That's why it's negative. It's clear. Change in inventory. Last year nothing. This year you have spent 46,250 worth of it. Great. Account payable is 25,000. Great. Change in salary payable. You're supposed to pay 1,250. Unknown revenue. Yes. Okay. 19,916. Change in capex is a gross fixed asset. So this is correct. Deposit paid. Yes, minus 3,000. Correct. Change in equity 2 lakhs. Change in debt is 20,000. Cash flow from finance. So BOP 0. EOP will be BOP plus net change in cash. So it will be equals your cash EOP. Enter. Your answer is matching. So only the change in rent is I purposely created this line of item. So do not think it as fill in the blanks. Just because that cell is there, don't assume that you have to fill something. Okay, don't do that. Because if you observe, even in the balance sheet 4, when you scroll down, see account payable 2, I have kept it. We don't need it. And even account receivable 2 also was there. We don't need it. So just because that is there doesn't mean that you need to fill it up. So you have to read the left side, understand whether you need it, is it required, is it thing. That's the reason the minute you put 2000, it was not matching for you. So don't think just because cells are there, you have to fill it. Whether you need to fill it or not is in your hands. Any doubts in this cash flow? If that is the case, if you have any thing you need to make changes in the 7th, can you try doing it? How many of you got proper matching in for the problem number 7? Type 7. Oh my God, nobody got 7th one correct? It's not matching. I'm not sure about it. At least what was your profit? What was your profit? Okay, so most of you have got the same answer. Let me try solving it. Please help me out. ABC is a high-end restaurant which started the operation on 1st Jan 2019. Following transaction occurred in the year 2019. Capital was introduced 10 lakhs on 1/1/19. I think everybody knows this. Your equity is 10 lakhs. Fixed asset bought for 5 lakhs. Yeah, I think it is 5 lakhs, right? Depreciation is 20% straight line method. So it equals this into 20%. So 1 lakh is the depreciation. So your net fixed will be 5 lakh minus 1 lakh. And what is your depreciation? 1 lakh. You can type 1 lakh. Anywhere you did not understand, please let me know. Don't keep quiet. 5 waiters and accountant were hired on 1119 at 2,50,000 per month for full year. Okay, so that means your salary is 2,50,000. 1, 2, 3. It's the salary expense. Food and beverages sold for cash rupees 65 lakhs. So that's your sales, right? 65. 1, 2, 3, 4, 5. Food and beverage item taken on credit worth 2 lakhs during the year. Yes. So it will be into 12. Very good. Thanks for observing it. It will be into 12 because it says 2.5 lakh per month. Obviously. Office rental is 2.5 lakhs. And then food and beverage taken on credit worth 2 lakh, 20 lakh during the year. So that means the COGS is 20 lakhs. Tell me where, if you've gone wrong anywhere, of this 3 lakh was paid on end of the year, means payable. Today, why very silent everyone? Nobody is helping me out. Nobody is prompting me. Let's leave the yellow one, which is marked. We'll come back. Of that, 7 lakhs was borrowed at the rate of 8%. So loan is 7 lakhs and rate of interest is 8%. So where's your interest expense? This one, 8% into 7 lakhs. Salaries for 1 year. This entire transaction is happening for 1 year. If you observe, see, capital introduced on 1/1/2019 and they're asking for balance sheet of 31/12/2019. It's going to be for 1 year. So loan is there. Okay. Any doubts so far until here? Just take 2 minutes time. Just scan everything. And not understood anything, you ask me if you want me to repeat anything. Can anyone tell me how much is your unknown revenue you have done? $60 lakhs. Let us see. 5 years membership, each person will get 2.5 lakhs. So 2,50,000. But each person offered, how many members are there into 30? So that is nothing but 2,50,000 into 30 is around 75 lakhs. But each year, so it will be 75 lakhs divided by 5. So first year 15 lakhs, second year 15, third year 15, fourth year 15, fifth year 15, that will become 75 lakhs. But only year one you have done the service. So your sales can go up to 15 lakhs. So that means how much you have not earned. 75 minus 50 is nothing but 60 lakhs. Any doubts in this? Same thing, very similar to the previous one, what we learned. Okay, now it will be sales plus another sales minus COGS, which is your gross profit. And your EBITDA will be gross profit minus salary expenses minus rent expenses. Then your EBIT will be EBITDA minus depreciation. Then your EBT will be EBIT minus interest expense. Tax is your 30% per annum they've said. So it will be EBT into 30%. So your profit after tax will be EBT minus tax. What about dividends they're saying? Here, on 31st December, half of net income was distributed. So that means equals divided by 2. So 9,07,900 was distributed. So what is the remaining money left in the company? 9 lakhs. There is nothing but your retained profit. So I'll add up the total shareholder equity, total liabilities. So your total liabilities is this plus shareholder equity. Tell me if I'm fast. Did you understand? So you only tell me what all I should fill it here. Then I'll know where you have gone wrong. What should I do here?
So can you explain dividend?
Okay. What is the money you have made profit? 18 lakhs, 15,800. Look at the point number 17. On 31st 12/2019, half of the net income was distributed. What do you mean by dividend? First of all, could you please just repeat? Okay, I will do that. What do you mean by dividend? Okay, when you see the entire net income belongs to whom? Who has the right to take this entire net income to their home, to their pocket? Who has the right to do it?
Shareholders.
Shareholders. But shareholders are nice. They're telling me I will not take entire thing. Whatever the company makes, I will take home 50% of it. That is what the understanding is. So that day company made around 18 lakhs. So that means 9 lakhs should be distributed to the shareholders. And the distribution is nothing but term is called as dividends. So dividend is 9 lakhs paid to the shareholders. Remaining 9 lakhs, what happened? They took it for company's development, and that is called as reserves and surpluses. Okay, that is called or retained profit. So retained profit or RS, reserves and surpluses, or retained earnings. That is what I have done. Retained profit 50% I have taken to my balance sheet, whereas the dividends 9 lakh I have paid to the shareholders. Is this clear?
Yes, sir.
What I
Yes, sir. Yes, sir.
Okay, and sir, could you repeat unearned revenue? Okay. Now, observe here what I do. Please answer. It's a 5-year membership. So 5-year membership. Year 1, year 2, year 3, year 4, year 5. First year, first of all, how many members are there? 30 members. Each member, how much you're charging? 2.5 lakhs. So that means year 1, how much money will you make? Can you give me the answer?
50,000.
No. 2.5 lakhs each member you have charged, and how many members are there? So it will be equals 2,50,000 into 30 members for 5 years. For 1 year it will be 15 lakhs. Agreed? Yes, 15 lakhs. Next year, how much you will have to charge them? 15 lakhs, right? Do you agree with me? Third year, fourth year, fifth year, same thing, right? 15 lakhs, 15 lakhs, 15 lakhs. But only year 1 you have done the service. Still pending, still pending, still pending, still pending. Only year 1 you have done. So that means how much have you earned out of 75 lakhs? Only 15 lakhs you are eligible for recording your income, because the remaining you have not at all given them service. You have not sold anything. So that is called unearned revenue. So out of entire 75 lakhs, only 15 lakhs you have done business. That is what I have put it over here as 15 lakhs. Remaining 60 lakhs, you have not given me service. Next year, your sales membership will also be 15 lakhs, but next year it will be 45 lakhs. That year, another year, it will be 30. Fourth year, it will be 15 lakhs. Last year will be 0 because you would have done complete service. So, but right now we are in the first year, so it will be 60 lakhs. Okay. So if you had gone through my video recordings, same concept we did it for the balance sheet 6. Okay. So if you had practiced that, you would have been able to do this. Okay. So please go through the recordings. You should be able to do it. I hope I have clarified, and others also through her doubt, your doubt also would have got clarified. Okay. So that's an advantage. Let's start solving the cash flow. Can anyone help me out? What is the answer? What should be profit after tax here? is equal to your, is it going to be 18 lakhs or 9 lakhs? What should it be? Yes, profit tax. Okay. Depreciation is 1 lakh. What about current assets? What is current assets here? It could be account receivable. So is it any increase or decrease in account current assets? Current assets actually zero. Nothing is there. What about current liabilities? Plus only, right? Yeah, plus 63 lakhs. So that's your CF. What about capex? Minus 5 lakhs. Careful, don't make a mistake. Change in equity would be 10 lakhs. Change in debt 7 lakhs. How about dividend paid? Very good. Equals minus 9. Add it up. So net change in cash flow will be CFF plus CFI plus CF. Beginning of cash is 0, nothing they have mentioned. So EOP will be BOP plus net change in cash. So your cash will be equals EOP, enter. The total assets will be cash plus net fixed asset. Is it not matching? Many people said got stuck up, was not able to balance it. Can you just put it in the chat box where you people would have gone wrong? Okay, got wrong with signs, now tallied. Okay, please give me your opinions where you went wrong.
Sir, as there is a time, can you show how to find cash in direct method?
Okay. I mean, that's it for the today. So we have time, nothing to worry. Okay. Come on, friends. All of you, let's start. What should I do first here? Equity, right? So it is plus 10 lakhs. And a loan also you got 7 lakhs. It will be plus. You have spent asset 5 lakhs. Minus you have paid dividend to the shareholder, so it's gone out of the pocket. Then what else should I do? Now you have paid tax minus 7,78,000. You have paid interest minus 56,000. Rent expenses minus 2.5 lakhs. Your salary expenses 30 lakhs. Okay. And you have received 65 lakhs. And you also received 15 lakhs. Actually, you received how much? You received 75 lakhs. But there is some credit, right? Food and beverages taken on credit worth of 20 lakhs. Of this, 33 lakhs was unpaid by the end of the year. Okay. Anything is missing? That's it.
Thank you, sir.
It is matching. So then what I have to do is equals 85 lakhs 7,900. Then this will be this plus net fixed asset. It still matches. So slight difference between direct and indirect, but I would suggest you not to go with direct. So don't even think about doing it because it's always the indirect what we do. But for your practice, you can go for and do it. But when you start doing the case studies, it's always the indirect method what we do. So why we didn't account interest paid in financing as just we did with dividends? That's a good question. I'll tell you why. I will tell you why. Anyone can answer that? One of your friend has asked a question. I want to know if anyone can answer that. I know the answer obviously, but I want to know if you can apply that and tell me if anyone.
Because interest comes in income statement.
Yes, very good. And okay, that's a very good thing. Okay, I think it's only 50% answer. Yeah, it comes in the income statement. So
And we pay it monthly.
that means it should come under CF only, no? So it's a repetitive thing. So it'll come under CF. But question is why we have not taken interest? She says like how we took dividends paid, we should have also taken interest expense into CFF because it's something to do with loan, something to do with debt, which is a CFF. Why we didn't take it in this?
So just as in the last sum, we didn't take rent because it comes in
Okay,
income statement. So just
fine.
as it goes with interest.
That's a good try. That's a good try.
Sir, net income, we already deduct the what is
Ah, very good.
accounting
Fantastic.
interest
Excellent.
rate.
Good. That's what I was just waiting for it. Friends, in when we taken PAT, profit after tax, in this already we have deducted interest. So 18 lakhs is coming after deducting the interest of 56,000. Only after that you're getting this much of money. So it is already calculated in your profit after tax. Good. Fantastic.
Sir, I have a question.
Yeah.
So when we prepare cash flow statement, for now you're
Yes.
given as, there's a prepared format for it when we do the sum. But when we do something on our own, how do we know that which are the things that has to be taken in cash flow statement, which are not have not to be taken?
Okay. See, one thing is this is like a template which made it easy for you, right? But in real time, you don't get this template. It's again how the company policies are followed. What they take in CFO, what they take in CFI will be predefined by the companies. So this is actually a very, very basic part, but when you actually see the real balance sheet income statement is actually a very big. But we are building blocks. We're learning one by one. But in real time, you will only have A1. So you have to build this from scratch. Definitely, you will be able to build it from scratch with time goes on, with little bit of experience, with little bit of practice. You will be able to do it all by yourself. Right. So that's how the auditors, the accountants, they will be able to do. Now you might say, sir, there are softwares for this. Yes, there are softwares for it which readily do it on behalf of you. But if it does everything by, then we don't need, right? We humans are not required. So you need to know how the software does these calculations. And if that something is wrong, you should be able to identify where you have gone wrong. But to get to that stage, you have to build all this manually. So all this will be predefined by the companies. What to take, what not to take, everything will be handled by them. And even like we don't know BOP for time being. So we are assuming it's zero and we're just keeping it zero. But in real life, it may not be zero because no company will start with zero cash, right? So they will have some cash. So what is that cash will be defined by the manager. Hope I think that is that your question?
Yes, sir. Like I just
Uh,
wanted to know, well, like what are the bases that we have to take in cash flow statement? Like we take few things now, sir, in cash flow statement. I just wanted to
correct.
know the base, what and all to be taken and what not.
Okay, that's all. Three items you have to take: CFO, CFI, and CFF. You have to judge it, which is comes under say all repetitive expenses, incomes, receipts. CFI automatically the investment. So you're not missing out anything in cash flow statement. You're taking everything actually. You're not saying that I'll only take assets, I'll only take liabilities. You're taking, in fact, this entire cash flow is a combination of entire income statement and entire balance sheet. You're not leaving out any item. You're considering every, you tell me which item from income and balance sheet we have left out in this cash flow statement. You have taken everything, but probably the names are different, categories are different, the sequence is different. But whatever you've done in income balance sheet, everything we have recorded here. Because cash flow tells you the real picture. It tells the truth. Whereas balance sheet and income statement doesn't tell you the truth. Especially income statement, no, it's very, very bad. It can deceive you a lot.
Yes, sir.
Look at it. Profit is how much? 18 lakhs. But what cash? How much cash you have? 89 lakhs you have. So where is that profit and where is that cash? I can even actually manipulate income statement. Now depreciation, I have taken it as something like 20% of straight line method. What if I change this to 30%? I'll change it to 30%. Okay. And I'm sure I have not linked it. So then this will become 1,50,000. It reduces to 17 lakhs. But look at your cash. It still remains the same. I'll make it 30% to 50% and change the depreciation to 2. Still reduced, but your cash is still there. So if you can manipulate so much in your income statement, but the real picture tomorrow, if you want to understand, is this company good? Is this company healthy? Is this company has all the money to pay back the loan, pay to the shareholders? One of it is your cash. Your company has to be cash rich. Only because of the cash rich, they can buy assets. They can pay the loans. They can pay the suppliers in advance. See, when they pay the supplier in advance, don't you think that supplier will give you in less price? Okay, so everything is connected. I'll show you how the business works. If I have cash, I pay full amount to the supplier. What will supplier in return will do? He will reduce the price because I have given him full amount. When he reduces the price, what happens to my margin? So sales is 65 lakhs, assume. COGS instead of 20 lakhs, cost, maybe now it's only 10 lakhs. So what is my gross profit? It's 55 lakhs now. Whereas here it is 60. Okay, because there's a plus 15 lakhs is the, so it'll be 80 minus 10. So now suddenly my gross profit is 70 lakhs. Because my cost is reduced, maybe I can reduce the selling price also by giving good discounts. Because I'm getting good discounts, I get more customers. And I am beating my competitor. And because I have cash, I will pay back my loan. Because I'm paying back my loan, what happens to my interest expense? It reduces. Because of that, my net income also increases. And because my net income is increasing, I will be able to pay my shareholders. And my shareholders are happy. Because my shareholders are happy, they will say, Chalega, don't give me 50%, just give me 30% share. So remaining 70% goes back to the company. Because it is going back to 70% to the company, I will buy assets. These assets will help me to manufacture more products. Because I'm buying machine, what happens? My labor rate will reduce because I don't need, machines are doing it. Because my labor will reduce, salary will decrease. You understanding the dynamics of the business where each one
Yes,
is
sir.
connected?
Yes, sir. Each and everything is connected.
Everything is connected. So that's how the business works. And suddenly, for example, say, look at this. I'll tell you my EBIT. Okay, I'll show you practically how people also will do. EBIT is say 2 lakhs. Carefully observe this. Tax say 30%. So what is my tax here? 2 lakhs into 30% is 6 lakhs. So what is my net income? EBIT minus tax. Just type yes. Fair enough. This is correct. Any doubt you have? Why should I pay 60,000 to government? I want to reduce. Can I do it? Okay, you tell me how I can reduce the tax. Excellent. If I take loan, I will be able to reduce the tax. So for example, EBIT, tax, net income, but above EBIT is what? Interest expense. Say assume that I have taken a loan of 1 lakh, 10% rate of interest. This will be sorry, this is not EBIT, this is EBT. This is also EBT. So assume that this is something like 2 lakhs, 1, 2, 3, 4, 5. Interest expense will be 2 lakhs into 10%. So now my EBIT will be 2 lakhs minus 20,000 interest expense. Now what will be my tax? To be equal to 18 lakhs into 30%. There you go. Suddenly 54,000. And your net income is 1 lakh 26. Why it is reduced? Because I've taken an interest. I've taken a loan of 1 lakh. So 10%. 10% of 1 lakh. Oh yeah, okay, correct. So it is 10,000. Yes. How much my income has reduced because I've taken a loan? How much is my income reduced from that to this? Or how much I have lost money because I've taken loan?
7,000.
I'll, I'll reframe my question. How much money did I lose by taking loan? I took a loan of 1 lakh, right? Because of that, how much cash did I lose? I lost 7,000, right? 1 lakh 14,000 because I didn't take loan. By taking loan, it is 1 lakh 33,000, right? That is the net income. Okay, friends, how much money I save by paying less to the government? How much money I save from last calculation to this calculation? 3,000, right? If I am not taking loan, it is 60,000. But if I take loan, I only have to pay 57,000 to government. So how much? 3,000. So actually, I am losing only 4,000. Agreed? But by losing 4 lakhs, what did I get? Exactly 1 lakh. Don't you think it's a good business to do that way? Would you not agree to lose 4,000 when you're going to get 1 lakh rupees? If you're a business lady, would you not mind losing 4,000 when you're getting 1 lakh from the bank? That's how business works, my friends. So even if you are cash rich, they will still take loan. Okay. I know slightly out of the topic, but this also could be adding value to your learning. Tomorrow, when you read anything in the newspaper that it's a cash rich, too much of loan is there, it could be reason why they want to avoid tax to the government so that they can have more cash in hand for their expenses. So when you start reading paper, when you start reading an article, when you start understanding the valuation, you start understanding the EBITDA, you understand the EBIT, you understand the assets, you understand the revenue, you understand their cash flows. So you start linking to what you're learning in this class. Some people think so it's purely accounting purpose. Not really, it's an accounting purpose. It's trying to understand A to Z of the company's operation. What is happening, where the revenue is coming, where the receipts are coming, and how they're utilizing those receipts. If the revenue is high, not necessarily cash will be high. If the revenue is low, there could be an increase in the cash. So your mind has to start calculating it. And I'm not going to tell you that you're going to do it in within a week or within a day, but when you focus on this, you become a better business lady or a businesswoman. When you start looking for setting up a boutique, a coffee shop, or a saloon, or a restaurant, you start calculating all these things comes in your mind, right? So by saying this, I'll stop the class today, and tomorrow we'll start the new from first case study, which is called as Toyota case model. So we're going to read it, we're going to solve it. I'm going to share you those case study. See if you can solve it by yourself, read it clearly, and see if you can do at least 50% of the problem, because now you are ready. Now you are ready actually to do practicals all by yourself, because all the fundamentals have been cleared at this point of time. So you start doing something from tomorrow onwards officially. So don't miss the class, something which you will learn new. And so far, any doubts in this class, any previous things, yeah, you can be honestly, you can talk to me in a sense like if you're finding it difficult, you're not understanding, it's confusing, too many things to remember, please be honest and you can tell me. I can take a backup class if you want. I can repeat it. That's fine. So I want everyone to learn at the end of the day. Okay, if nothing is that, thank you so much. Have a wonderful evening. I'll see you tomorrow.